Hello everyone, welcome to the Ichimoku daily analysis for the Aussie dollar US dollar FX for Thursday, May the 17th, 2012. Well, a continuation of the trend to the downside today, and just to make note that the candle that we're analysing is the second last candle that appears on this chart, not the final candle. The final candle is still developing and it's quite bearish at the moment. We'll have a look at that in a minute. But the candle is the second last candle that's been completed, and in bar chart terms that's an inside day. Did raise some doubt about continuation of the trend to the downside, and as we can see we haven't had any confirmation of a change of trend, so that did raise some doubt because the sellers for today's trading weren't strong enough to take out the previous low, and we've seen today that they've managed to do that, so a bit of a rest from the sellers for the trading day. Having said that, however, they did close with control on the trading day between the open and the close. They've closed the market down towards the lows, so the sellers have closed with control. They've shown fairly strong commitment, but not strong enough to take out the previous low, and that's the reason why the doubt was raised. But we also had the buyers losing commitment. We can see the shadow on the top of this candle, and that represents price rejection from near the previous day's high. So having seen the sellers not have enough commitment, the buyers certainly lacked any solid commitment as well, and that's why inside bars are indecisive type trading days. Today we've seen this market continue to the downside, however, and the market has interacted with this 98.59 level of support that was highlighted previously, and we are trending down below there. Now, whether we maintain this close down below that area remains to be seen. We need to watch how the market closes tomorrow, but at the moment it's looking very bearish. This 98.59 level is crucial to this market. If we do see that solid bearish close below, there isn't any solid support until the market trades down to 96.62. And that area down around 96 will confirm the target that we saw with the breakup from this flag pattern. Previous downtrend, congestion, sideways movement, a large volatile flag, breakout down below, and the target is down around the 96 level. So that would confirm that. In terms of the Fibonacci ratio retracement of this previous upswing, this first time frame upswing, we have the market in an extension mode at the moment. We've taken out the 100% level. The market was trading indecisively around the 161.8% level, and we've closed below that for today's trading, below the 99.31 area. The next level that I mentioned previously was this 261.8% level at 97.99, and the market is today trading on its way down to there, and that's an important level that we should look for some solid support. If we do see buying coming in, then we could see the market change trend and start to retrace part of this solid downswing that we've seen over the previous week or two. But then looking at the Fibonacci extension, and here we're looking at the market moving in a relationship to this previous downswing. We had the upswing following that, and the current downswing will move in a relationship to the previous downswing. And we had the market trading indecisively around the 50% level, indecisive spinning top type candle. We did see the market today close down below there, so the 61.8% level came into play, which was almost touched by the previous day's trading. But today we're seeing the market take that area out. So the next level that we should be watching for this is at the 78.6, which is not an important one, but it is a level where we could see the market find support, and that's at 97.86, and more importantly at the 100% level if we do see continued bearishness, which is down around the 96.88 level. In terms of Ichimoku, this market is trending down very solidly in all three timeframes. We're trading below the cloud, so in big picture terms, in the long-term time frame, the market is bearish. In the medium-term time frame, we're trading below the Kijun-sen, which is the pink indicator here, so the market is bearish in that medium-term time frame, and we're trading below the Tenkan-sen, the green line, so the market is bearish in the fast-term time frame, and the Chikou span is below the corresponding price action, so that's confirming the bearishness that we're seeing in all three time frames. Now, just looking quickly at the at the Kijun-sen, the pink line, that had turned flat. At the moment, this it is pointing down, but that's because of this current candle that we have, and that's reflecting what's happening in the market at the moment. That's still currently trading. But the Kijun-sen did turn flat, so there was a possibility that we could see the market rally back up towards the flat Kijun-sen. It looks quite unlikely now. We would require confirmation. That would have made the highs of these candles very important. There still is a possibility that the market could rally, but at the moment, having taken out this solid area at 98.59, it doesn't look as though we will. But if we did rally, certainly the $1 area, the round number, would offer itself as very, very strong resistance to this market. At the moment, to the downside, as I've mentioned, no solid support for this market down below the 98.59 level until we trade down to 96.62. So a bearish market in all three time frames. In the long-term, medium-term and fast-term timeframes, confirmation by the Chikou span, a market with an inside bar in bar chart terms, but very solid downside price rejection with the bears closing with control for the day, and today we've seen follow through taking out the support at 98.59.